Inflation just punched back harder than expected, shaking investor confidence and sending shockwaves through the mortgage and real estate markets. Friday's PCE report came in hotter than Wall Street hoped, and just like that, rate cut dreams on ice. Meanwhile, President Trump's surprise tariff threat on auto imports stirred fears of a trade war revival. Combine that with rising mortgage rates and shifting GDP numbers, and this past week turned into pressure cooker for real estate investors. So what does all this mean for your next deal or your financing strategy? Let's break it down. Let's kick things off with what matters more to real estate investors, what is going on with the interest rate. At the beginning of the week, the average 30-year fixed rate mortgage was around 6.72%, but it ended slightly higher at approximately 6.82% by the end of the week. The DSCR interest rate, which is crucial for real estate investors, hovered around 8.07%. Mortgage rates were influenced by economic uncertainty and the Federal Reserve stance on future rate cuts. This volatility is crucial for both homebuyers and investors. The US economy grew at 2.4% annual rate in Q4 on 2024, slightly above previous estimates. Consumer spending held strong, but business investments remained soft. This modest growth supports the Fed's higher for longer stance on rate and signals continued resilience in the economy, something real estate pros should watch closely. Now, here's the data that rattled the markets on Friday. The personal consumption expenditures, or PCE report, rose 0.3% in February, and the core PCE, excluding food and energy, jumped 0.4%, bringing annual core inflation to 2.8%. This hotter than expected print puts pressure on the Fed to hold off on any rate cuts, which directly impacts mortgage rates and investor borrowing costs. Let's zoom in on how consumers are behaving. Consumer spending rose 0.4% in February, bouncing back from a dip in January. But once adjusted for inflation, real spending only climbed at 0.1%. This shows that households are still spending, but higher prices are starting to take a toll, especially relevant for multifamily and retail real estate investors. Now let's shift to policy, because politics moves markets too. President Trump's proposal to impose a 25% tariff on imported vehicles spooked investors and revived fears of a renewed trade war. Markets reacted swiftly, with automakers' stocks tumbling. The ripple effects could hit consumer prices and industrial real estate demand if supply chains shift again. Finally, let's wrap up with how all this is landing on Wall Street and Main Street. The Dow and S&P saw sharp declines this week, largely due to inflation fears and trade uncertainty. Investors are now recalibrating expectations for rate cuts. For real estate investors, this means pricing in higher for longer borrowing costs and acting fast on any locked rates or active deals. So let's recap. This week we saw rising mortgages, a hotter than expected inflation print, stronger GDP numbers, and trade war fears resurface. Each of these factors will influence your financial strategy, deal timing, and long-term investment decisions. And just like this, guys, these are old news already. Thanks for watching. If you found this video helpful, don't forget to give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have any questions, you can find my contact information and phone number in the description below. Feel free to reach out. I am here to help you succeed. See you in the next video. Bye-bye.